And good evening, everybody. I'm Tyler Matheson.
And I'm Sue Herrera, filling in tonight for Susie Garab. Well, with the wicked winter weather still hanging in there, we got a surprisingly strong report on the jobs picture from the Labor Department today. The economy added 175,000 jobs last month, and previous months were revised higher. But the unemployment rate ticked up to 6.7% from 6.6% as more people started to look for work. The report offers a little more clarity about winter's effect on work, wages, and the economy. Here's Hampton Pearson.
Despite the harsh winter weather nationwide that kept more than 7 million workers at home for at least part of the month, employers stepped up hiring. Job gains beat forecasts by 46,000, renewing hopes that jobs and growth could accelerate this year.
Obviously, we were somewhat upset by the polar vortex, but I think that this reaffirms that growth pattern, that in fact not only is the economy growing, but it's accelerating.
For those with jobs, average hourly pay was up 9 cents to just over $24 an hour. It's the biggest monthly gain in 8 months, with hourly wages up 2.2% in the last 12 months, ahead of the inflation rate. But Labor Secretary Tom Perez says we can do better.
Real wages are up slightly, but way too many people are still working hard and falling behind. We've seen productivity since the since 1980 or so has gone up over 90%. Real wages have gone up something like 3%.
Even the increase in the unemployment rate to 6.7% was a good thing. It went up because more people began looking for work. CarMax, the nation's largest used car dealer, is expanding and hiring. 1,200 new jobs nationwide, including 140 employees at this brand new facility in Frederick, Maryland.
We're excited the fact that we're doing that type of growth, 10 to 15 stores in the next 2 fiscal years each year. That's a lot of excitement. The fact that we're hiring 1,200 positions right now as a company to get ready for the busy spring and summer car buying seasons as well.
For Alice Fisher, it's a fresh start. She's been hired and is getting training as a sales consultant. She's been out of work for more than 2.5 years. During that time, Ms. Fisher came face to face with what it means to be a mature professional in today's job market.
I've been on numerous interviews and have even had some, expressions of, oh my goodness, because they didn't expect me to be of a certain age. And so I continued to pursue, employment very actively and did everything that I could to get a job, everything that I could possibly do.
Not everyone is as fortunate as Ms. Fisher. Last month, long-term unemployment increased by more than 200,000. So now, nearly 4 million people have been out of work for 6 months or longer. For Nightly Business Report, I'm Hampton Pearson in Washington.
But even with so many people looking desperately for jobs, companies keep complaining that they just can't find the right workers for their open positions. In our latest installment in the series, Where the Jobs Are, Mary Thompson takes us to Timco Aviation in Greensboro, North Carolina, to look at the multi-pronged approach that company is taking to fill its skilled jobs gap.
Business is booming at Timco Aviation. The Greensboro, North Carolina firm provides FAA-required maintenance to commercial, cargo, and military planes. It's benefiting from the strong growth in the aviation industry, growth threatened by a lack of skilled workers.
We are at capacity. And so, again, if we were to expand, it would be an issue of getting enough workforce in here to actually work those aircraft.
Kip Blakely is Timco's Vice President of Industry and Government Relations. He says to meet demand and replace the 30 to 40% of its workforce nearing retirement, Timco needs to hire 350 workers a year for the next 3.
Replacing them isn't easy. The workers who take apart, inspect, repair, and then put planes like the 737 back together again need to be FAA certified, and that's a process that takes 2 years.
To ensure a steady stream of workers for present and future years, Timco's partnered with Greensboro's Guilford Community College to get the word out about jobs in the industry, starting with talks that are aimed at kids as young as 4th and 5th grade.
We try to spark that interest early when people are open to anything and haven't been routed in other directions.
Audrey Floyd chairs the aviation program at Guilford. Along with the elementary school outreach, Guilford and Timco support a 4-year aviation program at a local high school. One student, junior Bruno Kakasi, interned at Timco last summer and is shadowing a Timco engineer this year. The experience helping to cement his decision to become an aviation engineer.
It's more interesting now that I've seen, in depth and been in the cockpits of airplanes.
A third way Guilford funnels workers to Timco, a 2-year program providing graduates like technician Daniel Wade with the FAA certification they need to work on the planes.
I change oil filters, I clean and lube cables, remove and replace parts, a little bit of everything here.
And for Timco, getting more people who can do everything is the one thing it needs to keep growing. In Greensboro, North Carolina, I'm Mary Thompson for Nightly Business Report.
Well, the unexpected growth in overall job creation last month didn't do much for the stock market today, but for the week, all 3 indices are up. The benchmark Dow Jones Industrial Average gained 30 points. The Nasdaq fell 15, but the S&P 500 managed to eke out a new high by rising 1 point. Both the Dow and the S&P have finished higher for 2 consecutive weeks. The Nasdaq's been up for 5 weeks in a row.
Joining us now with his analysis on the jobs data and the markets is John Manley. He's Chief Equity Strategist at Wells Fargo Funds Management. John, welcome back. Good to have you with us.
Thank you, Tyler.
So, John, the jobs number was much better than most people expected. Why wasn't the response on the behalf of stock investors much better than most people expected?
Well, we're a fickle bunch, and some of this may have been anticipated, although it was technically a surprise. There are other things to worry about. The market's at a high for all intents and purposes. There are concerns about what's happening in Ukraine. And what have you done for me lately? I think it was still a very, very good number, and you just can't base any decisions on what happens at a given day.
But, John, does it change the way that the Fed looks at the economy? I mean, maybe we're getting a little bit stronger, but as Hampton Pearson pointed out in his piece earlier, there are still an awful lot of people that are out of work.
And I don't think it really changes the way the Fed approaches things. This is actually what the Fed wanted. The story you just ran must be music to Dr. Bernanke's ears. I mean, this is what the Fed tried to do, get the economy started. The economy has a natural tendency to grow. America's full of a lot of people who want to work and want to do things and make money. They just got to clear the way. It looks like they have. Now, the Fed is still going to be very, very slow to raise interest rates, very slow to tighten. So I think you have a little bit of an arbitrage. You have a while here where the economy can grow, help earnings, help employment, and the Fed isn't going to do anything because they want to err on the side of the angels.
Do you think the market can move higher from here over the next 9 months?
Yes. I think it can move decisively higher. I mean, I don't know how much. Our target is 2,000 for the S&P at the end of 2014, but that's just a number. The basic forces that were in place, the fundamental forces, the Fed, the earnings, the valuations that were in place a year ago are still in place. It's still a pretty positive scenario.
So where would you be deploying cash if you're a longer-term investor? Do you stick domestically, or do you look overseas as Europe continues its recovery and maybe some of the emerging markets are steadying out a little bit?
Yes, yes, and yes. I mean, I think I think they're all pretty attractive. I'm an American. I think the U.S. is attractive. I think on a 9-month basis, Europe may be even more attractive. It was cheaper. It was cheap for a reason. That reason was the recession. That reason is going away. I think that's a wonderful reason to buy stocks. Emerging markets is more of a sentiment play. I think people are so concerned. People are so nervous right now about that area that I think there probably are some really good opportunities. You have to be selective, and that's not my specialty, but I do think there's a lot of potential. It's perfectly good to start nibbling right now.
What about bonds?
You know, I'm glad I'm a stock strategist. I think I made the right career decision. Bonds will be okay. I see no reason for rates to go up. Inflation is low, and the Fed's going to try and keep rates low. But it was a great, well, let's put it this way, Tyler. I was 27 years old when the bond market rally started. How much do you want?
Yeah, it's been a nice, what, 30 years, right, John?
You're very kind.
Didn't mean to date you there. John Manley, thank you very much.
Thank you.
I got you by a couple of years anyway. Anyhow, John is with Wells Fargo Asset Management.